This is the Algo Futures Trader Weekly Market Roundup, and this is AFT7 for NinjaTrader 7. And the Algo Futures Trader comes with several templates already built in, and one of those templates is the one you're looking at here, and this is an opening morning range breakout. So the parts of it are the no trade zone here that's in blue here, and that tells the software it does not take any trades inside that no trade zone. It's waiting for an opening morning breakout. So it's either going to break out to the downside or break out to the upside. Okay, and it can be fully automated, where the software will take all the trades automatically. It'll manage all the trades. All right, it's programmed to take a 3 micro lot set of contracts, take off 2 contracts at a target, and then trail the balance with the trailing stop. There is one filter that we do utilize with the breakout strategy, and that is this traffic light filter here. So when that traffic light filter is on, you see these red dots here. They'll either be solid red for short trades. So in other words, all these have to be solid red like you see here or back here for the software to take the trade and to send the signal to execute the trade. For a long trade, these would all have to be green, right? And there's certain criteria that has to be met for all those to turn red or green, right? But that's one filter. The other filter that we talked about last week was our gap filter. So this is the MNQ, and this is from Friday's trading. And I wanted to just kind of go through Friday's trading to see how we analyze the market and these breakouts using some of these filters. Well, the first thing we had was an inside gap up. So we do have a gap filter, right? And that filter is housed in our Alpha Web Trader. So if I go down to gap bias here, well, what this will do is in the morning when the market's open, it will tell us what type of gap we have, and we use that as a filter. So Friday we had inside gaps to the upside. So you see these IGU. All right, so basically all four, the Dow, the S&P, the NASDAQ, and the Russell all had situations where they gapped up at the open. They were still inside the prior day's range, but gapped up from the previous day's close. And the tendency is that we will get a move down, right, to fill those gaps because it's a high probability situation. So here I just labeled this inside gap up. You see the arrow pointing down. That just tells us that the tendency is this market is going to want to sell off and fill those gaps about 70% of the time. All right, so that's one filter that told us, hey, we probably want to avoid long breakouts in the morning and only take short breakouts, right? We talked about that last week. Now you can see the software generated basically 2 signals to the short side. But why did we choose, or why would we say the NQ would be the better market, right? So if we look at one of the other components of our Alpha Web Trader here, and that's our alpha bias and our trendometer. Right, the alpha bias will tell us basically what the trend is. So basically on Friday morning, all this, what you see is green here, it was basically red, or it was a little bit mixed, but predominantly red. But it also categorizes each of those markets by strength. So right at the close there, the S&P 500 was a stronger market. It's listed first, then the Dow, the NASDAQ, small caps and mid caps. But at the time on Friday morning, the NASDAQ was at the bottom of the list, so it was the weakest market. In fact, if you look, and this is all information that you can get below this video, the links will take you to like our Discord server here, and this is our trading floor where I provide commentary in the morning. But what I said on Friday was the gap bias is still down until the gap fills. So the bias was to the short side. I said the NQ has broken down, was initially the weaker market. All right, so we have a situation where we have short trade setups breaking out to the downside. We have inside gaps to the upside in all the markets, but which one should we take? Well, since the NQ was showing up on our alpha bias as the weaker market, it makes sense to short the weaker market. Okay, and to give you an example why, if you see, all right, here's the MNQ. All right, so here's the short signals. Pretty nice, easy trade. So you would have gotten 2/3 of the position out here, and then it would have trailed with the trailing stop and got stopped out on the third around here. So you're pretty much done for the morning at that point. But if we compare that to the Dow, which ended up being the stronger market, all right, so when the NASDAQ was having a nice, easy sell-off, look what was going on with the Dow. The Dow just wouldn't go down. It just wouldn't go down. All right, it finally did capitulate and filled its gap. All right, so again, we would avoid the long trades here on the Dow based on the fact that we had a short bias, a short gap bias, and also overall the markets were more negative than positive. But the Dow was a stronger market, so probably avoid that one, trying to short the stronger market, even though it eventually did work out, and rather take the weaker market, which was showing up on the MNQ, was showing up as the weaker market on our alpha bias and our trendometer. Right, so those are some of the ways that we use the filters. So we're not just trading blindly, right? We have some discretion as to which trades we want to take, and that's the point at which we want to get you to, where you're not just blindly following a system. You understand the market structure, the news cycles, the biases, and all that comes together to identify which trades we want to take. All right, so hope that's helpful, and we'll take a look at the markets again next week.